Okay, I'm going to do a little experiment here, and I didn't get any FDA approval on it, but it's like psychological trick, If you put on Dark Side of the Moon or something, you put on the Wizard of Oz, the queue up. Things that queue up together because you want them to. So we were watching a random video on the last playback we did of a live session, just jamming, just playing nonsense, Lex. And it was amazing how it seemed to make sense. So here I'm going to use the infamous Gann grid, which is really just nothing but this 40, any angle you choose. So any rate of change you choose against the 10 pip grid with the 100 pip big horizontal handles there. And we're going to play back the market. And we're going to try to use this magical Gann grid, which is just nothing more than a very straightforward equal rate of change to the up and down trend or the up and down move. So one price pulse, if the market smashes down for 3 days or 3 weeks, if it goes down for 3 weeks, you'd say, wow, on the daily, it's just the most amazing trend in the world. So, the first time I saw the platform that was able to, I can't actually, some platforms will say, oh, you want a 2 hour chart? You want a 3 hour chart? So if you go to TradingView, probably you can get like a 22-minute chart, right? Or what's even worse is the tick bar chart, right? So where you get a 22 ticks per bar. Now to me, that is the most unusable thing, because if I look at that bar, I'm like, well, what time is it? Because it's all about time. If you have the 1 o'clock, a 4 hour chart, if you've got to trade for a 4 hour candle, so if you see a big bullish candle, what do you do? Now, I guess I could buy and sell it, right? And this Gann grid, which is nothing more than pre-written channels, and you can just manipulate this and get any kind of rate of change. Now, if you wanted a nice balanced, 45-degree angle, and you could put this right on the chart, and you could cue the prices to fit it. Your brain's just going to say, God, it's amazing how the inflection points on that. And that's only because you're just playing something, and I can make this, and I can cue that up. It also gives me the way to make the argument for the up and down. Is the market going up or is it going down? And also, what is the frequency of the trade? So if this is a 4 hour chart, that means this is Sunday to Sunday, which is about how many quadrants do you want? And you kind of, this way you can project how long you're going to be in this trade. And it's going to be about 2 days. It looks like, you're going to need maybe 3 days to complete a giant engulfment, a giant auction. And if I cue this up, so I'm using the closing prices to cue this. I'm just going to draw anywhere on here. It's like a fractal. Anywhere here, like here's the inflection, okay? That's the most prominent pullback price pulse on the chart. And that's going to be my, where I calibrate this. Yeah, roughly, now, when you get down like this, a little move is a big deal. Or I could just say, you know what, let's just go for whatever looks like visually appealing. Because in the end, it wouldn't matter whether I made it like this. You're going to think, oh, well, certainly if you make more of these, you'll be, oh, well, Jesus, if you make a bunch of these, I'm like, oh, I can definitely see where it's touching. Right? There's more inflection points. But then there's more trades. What would you do? I think this is a momentum. If you cue it to momentum, so you kind of have to just look at it at a glance and just go, okay, well, that looks close enough. It doesn't mean you have to abide by the lines on there, but it definitely makes your mind lead to the point of saying, I can imagine this is going up because it's leading me there. It's the prelude, I suppose. You look at it and you say, yeah, that would easily be, so now I'm talking about the Gann grid, which is really not, I should have started with the buying new lows and selling new lows. And then what do you do after that? So if you were to just put a buy limit below here and you get picked up, which is only a 10 pip window, and it only went down 5 pips into that. So if the spread's 3, you didn't get filled. Did you put 500 standard lots there? I probably wouldn't, because I don't know which low is going to be the low. And of course, if the tickets are expiring every 4 and 8 hours, you're getting filled, and you'd have to know when this heats up. As soon as this heats up, as soon as you crush this, and I don't know how far back that goes this way, but once that happens in these markets, like look what happened to dollar yen. Once they come into a 4, you're climbing up on a. You run like a scared politician. Like you're getting your ass blown up. Yeah, finally, the water broke there, huh? She's having a baby. Yeah, that the British guy got taken out. So I'm going to stab you to fucking death right there. Good old meeting. Hey, by the way, I'm a little pent up rage here. I got a little fucking mask rage. Sorry about your stabbing. But if you look left, the vacuums leave clues like that big sucking sound. And here's the scalp. So somebody got off a scalp here of like 20 pips. Somebody. If they happen to buy here at that moment, before the dump. Now the structures in the 4-hour closing prices, you can obviously make the claim that in a 10 pip window, you got a double bottom becoming a top on closing prices, and it overshoot, this is the critical, everything's lining up here. People with a 21 EMA are like, yeah, the 20, it's like this. Yeah, we're selling here. It's overbought in a downtrend, or it's a triangle. I mean, there's so many fucking people getting in because all the algorithms are stacking up there, right? The breakout traders the trend traders are getting in here, and like I suppose the deep pocket people that can handle a 300 pip stop, they're like, oh, I'm just going to buy your fucking 10 pips. Call me when it bounces here. Now, if you martingale in, then you'll make money. If you don't, if you come in linear, so. If you come in linear, you'd be like, okay, I cashed out, but these are all fucking losers, right? So you get in, when the market's ripping like a whore, you're going to have to put your orders in. Like here, the first thing to do is put a sell limit here, a sell limit here, a sell limit there, and just see what happens. Wait 8 hours. See, oh, you know what? They're not nailing it. They're not hitting it. So you come in with a 4-hour like this, sell limit, sell limit. It's about having the market come to you within 5 to 40 pips. So you have to pick, like I'm saying for a limit entry, you have to pick a span that you're going to be doing. So if you want to buy 80K or sell 80K, sell lightly into it in the beginning, because you can always wait for the end of the 4-hour period to pull a market order. When the market's ripping like a whore, unless you're on that whore rip train, you're just going to have to, okay, so if you're not used to getting on the 15-minute, there's only a half-hour pullback. So in 20 hours, there was 1 hour pullback. Now, that does happen. So would you, the trend traders, or I guess the robots that never sleep, would see that and go, oh, let's get on that trade. But does the real robot really perceive the gigundous target that it really, price pulse is as far as up 40, down 10, up 40? I mean, that's a classic symmetrical price pulse. Or up 40, down 15, up 80. I mean, just smooth, clean, like no fucking pullback right on a 4-hour chart. Or maybe a couple dojis, but it's just fucking ripping. And it's plunging into stuff at a rate of change that if you're on the 1-hour chart, your head's exploding. If you're looking at the here on the 4-hour big zoomed out view like this, I mean, next week I can easily see the market probing up in here. Would you sell up in there? And using this channel, you could say, well, I'm long. I bought here. It's gonna bang on this channel all the way up like this, as I perceived scenario. And realistic rate of change. So what's the typical rate of change? You cue this GAN as steep as you want. If you only want to be in the trade for 12 hours or 4 bars, then the GAN grid's going to be so steep it's going to blow. That's the problem, is the steepness and the volatility. So the market's doing nothing and then it rips. And people are like, wow, I mean, what the fuck? Now if you were loaded in some symmetrical hedge, like, I don't think people psychologically handle the idea of being instead of transgender, you're just like totally unisex until you find yourself in a place where you got to switch or you're going to fucking die, right? So you're trying to make money. Well, I'm a girl, so I guess I'd be a seller, I'll be a bear. I'll be hunter-gatherers as opposed to sniper. But snipers could sell. But, I'm saying is that this approach to the market, whereas, the moving average people, okay, so one time, no nonsense guy says, well, you got to wait for the indicators to catch up sometimes. See, what's going on here is that you got an indicator, 8-period moving average, because, now it's true that is going to smooth out the data and it's going to make the decision. But if you take the Gann grid and you make this thing say, well, I'm trying to make like 20 pips in 8 hours. That's what it looks like. This is your rate of change, which the market's capable. If you look at closing prices only, forget the channel idea. Just look at the rate of change on closing prices. Probably have to change the color of the grid to have that show up as a factor. But this is the true rate of change. So when the market's ripping down, and of course this is how many pips, right? So how many pips are you trying to make per? So this would be about 50 pips, right? And 50 pips a week is what you're trying to make. That's what it would look like if you were to adhere to this, or 50 pips per week by the end. But I'm going to put in the half, so 25 pips. Let's think 100 pips a week, right? Try to make 100 pips a week. But in increments, but that's the rate of change, right? A completely boxed in force rate of change there. That gets hard. It gets squirrely down there, but it will cut it in thirds. Now, that looks totally acceptable. I can see that. Like, look at this, hug the trend line. This is the rate of change. So that's the trend line rate of change, which is like a moving average. But the nice thing about this, there was this thing I went to, a symposium or whatever conference thing. Oh God, 20 years ago. And some guy says, and this is before forex, he says, because these guys were doing charts on something, I don't know what, maybe cotton markets, whatever the fuck. And he says, PyroPoint. It's called PyroPoint. And I go, it looked just like this. I go, that's interesting because it's projecting into the future. And I think the rate of change you pick. But this is a way to organize into the future trading. So you can make the down argument, the up argument, or you can just say, well, I'm trying to make, or like here, I guess you're trying to say, what's a realistic rate of change? 100 pips a week. That's the angle at 100 pips a week. Forget the quadrants. It's just and then you could slice it really thin. Or you could forget about that whole thing. But for the people that want to see, or for the, how much could you make a week? Just in pips, and just, I guess you dial up. Here's the way these people are doing it with the percentage. They're saying, find how you make 100 pips a week, and then as the account gets bigger, just keep cranking up that one trade. But I don't think you can do it on one ticket. So, just because you're trying to make 100 pips a week, well, maybe you made 80 pips on Monday and 20 pips the rest of the week because you lost some pips too, right? And then the dilemma is, well, I'm not a very consistent trader. I want to make 100 pips a week. Like, so if you're really like Biden about, well, we're going to mandate you, if you don't make 100 pips a week, we just cut off cut your eyeball out and set it in the computer. So, that kind of stuff. There's a lot of restrictions people put on themselves with trading because they say, gosh, I got to get better at that because, well, it's just a matter of, it's a math risk in the end, which takes out the fun, I think, when you just look at it. Well, try to risk $80 to make risk 80 to make $60. So if you told a guy who's a lottery ticket guy, well, you know what? You're going to get most of your money back so you can bet again. I mean, you're not going to, if you buy a $30 lottery ticket and your chance of making 10, I mean, you're in the game, right? This is what they do at casinos, I'm assuming. They go, you know, how much psychologically can we give this guy a little bit? So if you have your scalps built in, where you're going to risk 16 pips to make 8 or whatever have you, whatever that number is, and how many of the tickets are going to be like that? And they could be 10Ks, I suppose, if you really don't give a fuck. But how many are you going to pepper in there? Because you know the market's noisy, and then it makes a big lunge. Am I going to trade the noise and make money? And am I going to trade the big giant rip? And so if you just forget the Gann grid for a second. So just think about, now we're assuming we can just see on the chart without the, so we trade the training wheels off, so to speak. I mean, at some point, all the indicators people put up there, they're going to strip them down and go, yeah, I don't think, I mean, I kind of think I know what's going on. Like you don't have a, it's like when you're driving your car, can you see the rear tires? I mean, you're like, okay, I know I'm on four wheels. At some point, you just have that confidence. Maybe not. Maybe you want to see it back. They got those cameras in the back now. So if I just go for raw price data, and I just think, well, how, I mean, I'm not really going to dictate how long I'm going to be in this trade at this point. Once you take the Gann grid off, you kind of actually taken another rule off the table, so you don't have to abide by that. I guess I'm not into all these rules. Only because you're not being authentic, right? So if you, I mean, I'm not talking about like don't kill people rules, but I'm saying people have quite a dialed in. You'd think, well, if I just added a little more. No, typically when you're cooking food, you have to have a nice piece of food. What you do to it after that, as long as you don't scorch it, unless that's what you're looking for, you know, a little bit of seasoning, but you don't put 80 spices in there trying to make up for a piece of, you know, for a bad starting piece. That's the argument for people saying, oh, well, I'm waiting for a setup. See, what I'm doing is I'm waiting for this setup. It involves that I'm going to trade in the direction of the trend. I mean, this all sounds logical. I'm going to trade in the direction of the trend, and I'm going to wait for two dojis. And I bet if you back tested two dojis above a 13 EMA, which is an Alexander Elder classic, anytime the market's, tell the robot, anytime the market's above and there's two dojis, get in, right? Because it's going to be a low frequency trade. It's not going to overtrade. And it's supposedly going to pick the most ideal setups, and it'll probably do good sometimes, but really, how tight was the stop on that? How many robots are trading that? You'd have to have 20 robots doing that same dumb shit trade, and you'd have to come back and tune those guys up and go, okay, we're going to give you a spectrum of ratios, right? Spectrum of ratios over 20 robots trading a dumb trade plan. You could do it, right? You could take MetaTrader's got a free a moving average over thing. And you sit there and you fucking, it's like babysitting 20 stupid people that are going to execute trades for you. Bring me coffee, but you can't make the mistake of saying the wrong thing to them because they'll repeat the same dumb shit over and over again, right? So that's why maybe robots, you know, people don't usually trade them. You know, this Ryan Brown guy, he's crazy. He trade real money with some execute at the market robots. I mean, that's insane, dude. I mean, limit orders, at least you've got a chance. Executing at the market, what if you get a requote? You're not, the robot's trying to get in, and the broker's going, dude, that price is no longer available, or it's getting, it's chasing the market because he had it like when the market goes. You should see his thing. This thing's buys 300K in like 8 seconds. Well, it's just putting in the tickets, of course. Well, unless you got fucking fiber to fucking the broker, you know, unless you're really one of these high frequency fast execution people. Yeah, it matters then, right? Because you're trying to pile in and skim into the trade. You're really trying to gush into it. Whereas if you're sitting on the sidelines, you're waiting for the market to sell off 80 pips so they they ping your limit entries, or hopefully a bank of entries down there with some kind of tactical strategic layout, which is not linear, because it's going to be more robust if it's not linear, because linear stuff just crushes, But like a honeycomb thing down there. And of course, that's going to be just that one. You'll have to rinse and repeat that trade. You could have a double click set up like that, or you could just sit there and just, wait till the stock market opens and go, yeah, it looks like it's going up, and get in. Or you do have this no nonsense shit where you get 5 trades a month, and you're making $1,000 a trade. I got it. I can't do it, but I see people doing it. They put a trailing stop at 500 once it gets to the so-called. This is the so-called big lie. Look, I can't lose on this trade, dude. You were up so fucking big like last week. You could have just dumped that fucker and got back in. What was it so hard to get in that one trade? Yeah, because I had to wait for my indicators to catch up. So that's what I see. And not everybody has to be scalping the market, which is certainly a whole nother lifestyle. But yeah, the guys that are trading no nonsense, apparently, they have a lot of patience, and they're able to sit back. And so my problem is I'm impatient. So I see the market moving really fast. Is there a way I can get in? Is there a way I can? And then I see it still dead in the water, and I think, holy shit, this thing's going to explode. I mean, at some point, as the triangle forms, maybe you build a position. My favorite is to build a position inside the triangle and go, you know what, looks like we're going to fucking keep going up here. But we're going to drift, so I'll just keep buying every time it sells off on the drift. And I have limits trolling down there to pick up something. And then when it rips, I'll be like, yeah, this is just a perfect amount of position I want to be in. Because I can't conceive that I'm good enough to pull the trigger on a 50K and put a 50K limit in and go, okay, let's go with that. Because if they blow through that shit, which, look at any chart and go, there's no such thing as support and resistance, in the sense that once the market rips, it's fucking gone, So then what do? It's so you're either waiting for stocks to open. You'll see everything queue up. Markets are either lopsided or they're evened out. And then here comes Dow Jones, and there's news come. So the news comes out. You see kind of a move. Is it going to follow through when stocks open? Or is that just kind of a dead cat bounce and they're going to crash it? Well, you don't know. So here I'll be just trade, in this 10-pip grid, because I figure if your spread is 1, then it's 10% cost of doing business. But I'll pay 20% for a high probability. I'll pay 50% for a high probability scratch and win ticket. So if you're always imagine you bet $50 and you're always getting $50, how long are you going to scratch these lottery tickets? And then maybe you risk 40 to make 60. And you do have an outlandish, I risk 1 to make 8. It's so funny that the trading girl thinks that you can just, we're going to go for the highest ratios. Okay, it looks good on paper, but how many trades are you doing like this? And you're really going to, I guess if you're building a segment of a Bitcoin on your computer, you have a little thing there, then, okay, well, I'm participating, and here's my little chunk. Because communal money, right? Once the money pours into these markets, whether they're worth, to me, gold, I don't really, I just think it's kind of tacky as far as jewelry goes. But, I guess people have moved up to titanium now, that black. You see people with the black rings. And it's just all sorts of, where's platinum, for God's sakes? Platinum's cheap as hell. When's platinum coming back? But I know people that would only get silver and turquoise. They'd just be silver jewelry only for me, But that, it's what people decide, because you always do wonder. Supposedly gold's based on the fact what it costs to get it out of the ground. But a lot of these things have price kind of fixes. I think there's a coffee cartel, or OPEC used to lock crude at a certain price, They peg it, right? So I guess that's what they're doing. So how free market is it really? But I think it's a sector rotation. People do panic. The whole mob panics. It's not just one guy, one big boy out there moving the market. there's no difference mentally between a retail trader's panic and a big boy. Supposedly a big boy, just talking about big boys in terms of people with a lot of money. They actually might panic more, right? Because little guys like, well, fuck, I'm down like $1,000. This guy's down like fucking $1 million on this trade, you know. And there's people those taking a lot of risk, a lot of risk. I mean, of course, you know, there's no leverage in it, but still, it's a lot of money, right? So then it is. So if you have a small account with high leverage, it's just equivalent to this guy with the real account, no leverage. He's the, you know, it's a lot of money, but this is over the counter trading. If you only want to be in the market for 48 hours, then I look at this chart in terms of that. Like, well, if the market was open right now, what would I do? And it's only because the limit entry that's made it easier for me to not have to worry about missing out on a trade. The market orders, yeah, if I was building a position, a 20% market orders is ideal. I mean, 20%, I can't say that though if you're scalping, because if you're sitting there and the Dow Jones opens and you go, oh yeah, this is like if you're not in big enough a position, add at the market if need be, but you should ideally get filled at the limit, because you're saying, I know where the order blocks are, I got my fucking limits in, so let them hit it and let it rip. Or if you even want to trade on stop entry, you go, you know what, I got bracketed the apex of the triangle, I got 80K above, 80K below with summer scalps, because if they whipsaw and it doesn't break out, it fakes out both legs, then okay, I only lost $40 instead of 100, because I'm trading everybody's trade plan at once. You know, you're kind of trading, if you got the trend trade in there, okay, I'll do a trend trade, you know. I mean, I can trend trade. The market pulls back after going up. It goes up, it pauses, get the fuck in. That's a trend trade, right? The limit trade is, it goes up, they just hit your limit, you're short. You're hoping that it's nothing but a retracement. You're hoping that, or I mean, to make money, that's you're hoping. That's how you make money in a trade. But how do you know if it's going to rip back or it's going to be a trend trade? Well, you don't. I mean, for certain, you can kind of see possibilities there, but there's always the retest. I think people like, man, this thing's really going up, but then inevitably comes back all the way to starting gate within like 12 hours. Look at this spot here. Right here in 12 hours. Like, you bought down here and you're like, dude, we just got like a fucking new low entry. I put a buy limit I put like a 50K in this pocket. So really the entries, if you imagine entering only in a 10 pip window, that's the limit entry technique. And if I put these orders down here, so they lasted like all day long, I know they got filled. So the first fill here, we're trying to make 10 pips because we got to pay. So we make our 10 pips. How many tickets are on the 10 pip? Well, if it's a 10 pip with an 8 pip stop, you could have more tickets. But if it's a 10 pip with a 20 pip stop, you can't have as many tickets to keep to stay in this 2% risk idea. To keep that. So the global 2% coming down on top of all these little baby orders, the way they're all complexly arranged there, kind of complex arrangement, that's the trick. Because if you have below this, if you commit to buying this 10 pip window and you've got a 10 pip stop, they just took that out. So because this is a lonely wick, I don't think it's just this is where you have to, robots probably couldn't sense this aspect of this, is that when you see this old vacuum, count on it plunging through it. Like, just count on that, because it's really a high probability that once you cut below here, I would expect it to, like, I would plan on it dropping this much. So a lot of my tickets don't fill. If I have bunch of, like, if I start buying a 1K, a 2K, a 3K, a 4K, a 5K, and one particular scheme, okay, this is all layered in there. Okay, so I'm in a 1K, I'm in 3K, now I'm in 6K total. Never got filled at this. That's a completely different trade plan than saying I'm going to buy a 1K, a 2K, a 3K, a 4K, a 5K, a 6K, a 7K, all the way up to 20K per 20K on one ticket with a stop down here. And just saying, you know what? Come and get me. Come and get that order bank. So it's the design of the order bank does matter. Or the way you lay them out. Because if you say, given this trade plan, where you're going to risk, so if I put sell limits in every 10 pips, we'll just do the simplest. A 1K, a 2K, a 3K, no fill in the 4K. It could just be a 10K, a 20K, a 30K. So a guy that wants to go, and I'm not going to sit there and put a bunch of fucking tiny orders in like this. I just want to go, every 10 pips, we buy a 10K, or we sell a 10K. And that's going to be 60K with a stop here, right? Do the math. That's a lot of money. And what the hard part is, this is why you're probably going to want to do 5Ks and put twice as many in, because as soon as you look to get out of this trade, you have to think about the money management of taking profits, because you don't want to be, you sell a 10K, a 20, we'll start selling here. 10, 20, 30K, no fill, almost filled in the 40K. Let's say it got filled. And you got to stop up here for the whole thing, a hard stop. And you've got a 50K that never filled, and the 60K never filled, connected to this stop. So as it gets bigger, the risk is, you try to get that to be the same amount of money. If that's the stop for that, no, actually it might cost more. But where's the exit? If you take this one off the table, saying that'll be my trend trade, because I'm risking so much, that'll be my trend trade. And this would be my next, so if you do a linear exit, this one's going to get out here. This one gets out here. And this one gets out here. Perfect scenario for those, just in that one instance, buying every 10 pips without getting stopped out. That's the problem. You don't lose till they stop you. I mean, you're underwater, but you don't get you drawdown. To me, a drawdown is you're in the position, you're in negative, you're still in it. A loss to me is you stopped out. Okay, now you start over. I'm gonna get back in. So you're either holding a drawdown loss, or you're down on you cashed out. Or you already took profits. But everybody talks about losses because nobody wants to lose, right? But trying to make 5 pips with a 100 pip stop is a lot easier than trying to make 100 pips with a 5 pip stop. And the ratio just tells you, yeah, I mean, you're looking to land on the moon, You try to get, I could see on here where you have a 15 pip stop, an 18 pip stop, a 20 pip stop, a 19 pip stop. You've got a 22 pip type profit, and you have a cluster of orders in here. That is perfect to me. So when this market came in every 10 pip window, I get bigger tickets, and I have a bunch of tiny tickets in here. Only going to make 10, only going to make this, only going to make that. And when the market gets to here, actually, this is my first dumping target, apparently for other people here, and that's double top. But then it does that a little bit, tries to engulf. And that is maybe this ticket's going to try to make 20 pips. So if every ticket might make 20 pips, but that's just one simple trade plan. So these are always showing up. The Williams fractal just makes it easier to see it in a way, because it's just based any swing high. sellers galore up here, right there. Actually, the premium trade here, the big scalp, was to sell here and dump after you made your 20 pips. And your targets really are set to like 30 max because you don't really see too many big giant moves. Now you could have some tickets that are still on the table there, but it's pretty tough. Maybe you scalp this, like this stuff. You're making 20 pips consistently, and then this big rip. Well, all right. If you had if you weren't trading every 2 hours and 3 hours here, you'd probably have orders sitting in this giant liquidity zone. Whereas if we ever come down there, it's going to be that testing ground, and it just went just a little bit lower. So if you bought from here down to here, that's 20 pip window, and buy more under here. So you instead of buying that $1 million position down here, you're gonna buy 10K, 20K, 30K, 40K, and the targets for here are gonna be like this. It's pure limit strategy. And for retracements, and there's a trend. So if you can get in these dojis, what you do is run a really tight stop with a big target with a limit order. I'm only saying buy at the market because after the 4 hours of the markets, when there's a doji after 4 hours, it's like, okay, let's put a market order in with a tight stop because we're planning on some kind of explosion or some kind of big move. Whereas so trend trading with a shallow limit. If I think this is an uptrend, like we're about to break up here and just keep going, I'm just going to run, like a 2 or 4 hour orders like this, buy real shallow, stop here and a target way up here. So that's a better like a trend trade. I got shallow sell limits here. I'm looking for the market to crush into this hole, so I'm actually gonna use the tight stops, and it's a trend trade on limits because I got sell limits up here in this little shallow, really close to the market, with stops here, and the ratios are going to be like this all the way down. Sometimes you could just set all your targets really big, but then you'd have to be there to get the scalps off the table. And the problem is if you have everything on the same target, then you got to take the whole position off. Where if the scalps are built in, so once it does this thing, it cashes out on something, right? So it does a little cash out, and then, there's a couple lingering big targets, but if you dedicate the whole trade plan for this big sweeping move, then this moved here, this pullback is 4 hours in a 20 pip pullback, so on limits, you're just getting in. Whereas at the market, you'd buy this pullback, you'd buy that pullback, you'd buy this pullback, because it did 2 down. Buy this pullback. You're just buying every pullback if you think it's going up. You really never took profits if you didn't dump any of these tickets. The problem here is that if you bought here and you did not dump, you're trying to build a position in that triangle. Buy. You're a patient person. You're fucking. That's like a day of accumulation. Now we're looking for that smash up and the dollar to go to hell, right? There's so many trades on this chart. I can't even imagine. If you trade really dense on this chart, why go anywhere else, right? Why trade 20 markets? There's so many fucking trades on here. And it's this most liquid currency is the euro dollar. No nonsense says, you shouldn't trade the euro dollar because it's got the dollar in it. What in the fuck happened to this guy? It's because it's got the dollar in it? Like that's a bad thing? Well, yeah, it's just fiat currency. So I know, it's bad. The dollar. For God's sakes, man. Then my account's in dollars. So what? What does it matter? It could be lira. It doesn't. It's just what we're using. U.S. dollars is a standard of value. It's like gold. Everybody knows what gold costs. If you're in the gold market, everybody knows what Anything costs. But it doesn't matter if we're in a 40K and it just moved 100 pips, and we're up X amount of dollars. Is that the only trade you're going to do this week? You brought, all the, and the market's going to retest probably. So even if you bought here on this, once it took out this thing, and you have a dense order of a pack of orders in here, you pick up 80K, you dump 40 by here. So if all your targets were set for here automatically, yeah, but they're not. Typically, nobody's got the perfect, well, I'm going to buy 20 pips here and then 30 pips get out. Because, yeah, this pullback's coming, and it's just like these profits never even fucking occurred. You're only up like 20 pips at this point. I don't know if anybody ever done this trade, but this is the most annoying thing. Okay, so you're like, I'm a fucking genius that bought here. Okay, you're up, and look at the wick here. It actually climaxed like crazy up here, but then smashed down, and you're like, shit. I mean, like, do you buy more? Do you say, and I'm talking about buying 80K on 1Ks, and your early targets of 10 and 20 got taken off the table, 30. How many of those tickets were dedicated to the scalp? If the more that we're dedicated to scalping, then the more you're inclined to buy this on pullbacks. So if you always have a constant, I guess the best way to think about it is, so let's say you always have 5K. You're always in 5K of something. This way, you kind of, if you're not in the market at all, you're flat. It's a different mindset than if you're in 5K. It's like, well, I'm in 5K. Does this still look like a good trade to you? Like, should I buy another 5K? It looks really good. Like, this trade looks like it's going to be good. This is why people are doing this, probing the market. Yeah, because psychologically, as soon as you get into a little trade, so ICT said this one day. Yeah, I go into a little trade there, and I see how I feel. Well, of course, because all the technical analysis in the world is bullshit. If you feel like you're, oh, you know what? Because how are you going to trust your feelings? So people would say, you should not be an emotional trader. But if your emotions are giving you, like, and maybe you're going to go against your emotions. So if you're scared, you're like, it's probably a good trade. This is the perverse thing, is that maybe you're like, oh, I don't like this trade. Of course, you can't. The problem there is that your brain is going to want to make it make sense when you think back on it. So there's no way of telling whether your feelings, like, unless you're psychic, your feelings are going to guide you through that. So if you're looking at it as a math situation, like, okay, I just lost $150 trading today. It's as if I got my car fixed. I always attribute it to like, if I lose, I go, dude, it's like you fixed your car all over again. Like, the fuck? So, of course, if you're making twice as much on the next trade, you just go, okay, well, that's just how it is. I mean, crashed my car. Put in too many tickets, fell asleep, woke up, markets ripped through my limit orders. What the fuck? Now, just the same thing as if I got in the market with a wide stop and I look and I'm like, holy shit, I'm so down on this trade. I mean, how are people dealing with that? So you have to deal with it in some kind of, you can't connect it to your trading in a way because you don't know what's going to happen. So it's not on your shoulders to really worry about that. It's just how much, like, do you trade with a stop even? So if you don't trade with a stop, the account's a stop. You've got $500 in your account or 10 million in your account. You don't put a stop on it. Okay, you could lose a considerable amount. It's that a lifestyle you can handle, because it's really like saying, oh, I own this car. I smash it up like every other week. I kind of put a dent in it. I think the indicators are supposed to be the holy grail, so you never dent your car. Never had a loss in this account. I mean, there's people that talk about, we never had a losing trade. Never had. ICT bragging. Well, I got it. Look at this entry. I'm like 1 pip from my entrance. How many times you doing that trade? Yeah, anybody can. I can do that probably a couple times. Well, you really focus that much. He's already talking about scaling in and scaling out. So the idea that he's getting in the perfect pip, it's bullshit because he's already admitted that. Oh, it's like, oh, it lasts for 5 months. This fucking vaccine. What are you talking about? Actually, it's only 3 months now because we're really making them offshore. We're making them way out. We don't even know. We don't speak that language. It's funny to watch the ship come unraveled here. It's actually quite a nice breakthrough where people are going to liberate themselves for the first fucking time. People have to re-liberate themselves. And these Marxists are like, they're so cute. They're like, wow, we got this. They're high-fiving each other like, we got this in the bag. We got this new thing. It's a word salad. And you're going to vote. We're going to force you to vote on it. I heard they're going to mandate voting for liberals. Like in these other countries, it's like, you don't vote liberal, you're dead. Like, why not, right? People come in and rap because they're so goddamn wealthy. This is what I think's going on. People are so fucking rich. People got a fucking cell phone, dude. They've got a movie theater, a transponder. You check your weather. You can fucking tune your guitar on these phones and shit. You can do anything on this phone, electronically. And camera, the whole thing. Probably even get a record digital. You get a high-end converter, and it comes in there as just a. So now everybody's so wealthy. They're like, oh, we're so spoiled. Can I be on different sex? Oh my God, really? You got that kind of fucking time on your hands. And can you make it not so snowy out when it's winter? Because the weather, I'm just going to call it weather change instead of climate. We're going there, right? Well, there's this problem with the weather. It keeps changing. It's stressing me out. So, yeah, I'm telling you what, man, we're in trouble. We just are. He's in a heap of trouble, son. No, they just drove it off a cliff. But they've done this before. It's just that everybody gets to watch it happen now. In the old days, you'd have to go to the newspaper, stand in the morning, and see what kind of fucking corruption, who was fucking who was fucking out. Now it's just like a technological dystopian situation. So that's the other situation you have to deal with, is the shocks, Certainly in the markets, they can be quite staggering. Market just rips in a certain direction. And if people will read the newspapers online, real time, trying to figure out, well, how's this going to affect I've seen these news reports come out on the jobs report, and I'm like, it's just volatility coming in the market. I don't really see any kind of like predictive, this should go there. Yeah, even if that's true, there's going to be a giant fucking pin bar that's just going to be a giant spike. So if you trade those things, and of course it would take, you just have to accept the fact that whatever you've laid out there, there'll be slippage, I suppose, on the news. But these are just money. So trying to match up the technical analysis, which there's a lot of technical analysis books on the market, but there's never really a psychological analysis. I think you have to make that whatever you're trading, your system, you have to make it your own. Yeah, people want to copy. They want to copy winning traders. Well, what are you doing that's winning? I don't know if people can do it because this guitar playing stuff. I see people play guitar licks. I'm like, I wouldn't waste my time learning that lick. I mean, it's so mechanical. I guess it's like these arpeggios can be very unsoulful. You know, it's just like a fucking pattern. Whereas if you're playing a melody that has pauses in it and stuff, so you're playing linear shredding, you're just going to, you know, so the melody is got dimension and it's staggered out. That's the market is to me. It's like this bizarre melody. So getting these robots to try to go for these random things, I don't know. I think every time I think about it, I think, isn't it easier just to think about the next 8 hours? If the market was open right now, or the market's going to open Sunday night, you're like, okay, well, what's going to look like here? How can I picture myself getting into these trades? Every technical analysis book, they're not like, well, when you see this moving average crossover, get your finger by your mouse. Okay, you got your finger and mouse, right? Okay. Is the market open? Okay. There's a checklist here now. Okay. Is it legal to trade in your country? That's another thing. You know, they made it illegal. What they don't fucking make illegal. I was just listening to what the backup was on all these containers. This big giant fucking. Looks every time I see that, I think I'm watching one of these gangsta movies. But they got the containers lined up there. And the problem is, in California, the truckers aren't allowed to drive their fucking trucks once they expire. This year. Your truck just expired. It's just too polluted for California. It's 5 years old. No, it's like 8 years. Your truck's 8 years old. I mean, I went to get my tires fixed, and the guy goes, your tires are 8 years old. I'm like, they're fucking brand new. I mean, I soak them in Armor All. I got 10 miles on them. Doesn't matter. It just doesn't matter. You're perfectly healthy. Well, we're going to give you a fucking bypass. I know, but I'm healthy. Don't matter. It just don't matter. Why is that? Well, what's what we do? We just do shit you don't want done. We're the government. We're here to help you. I'm your forex mentor, and I'm here to help you. Now look here, son. There ain't no order blocks. There ain't no cock blocks. There ain't none of that shit. It's all in your head. So what I'm trying to say is really is in your mind. And the feeling of losing as opposed to the feeling of winning. So the euphoria, right, of winning. You can't get too excited when you're winning because then when you lose, you want to blow your brains out. So you really want to keep it even keel. And you just treat it like, you know, yeah, it's just a fucking mess, you know. They could probably kick me out of this trade. So a lot of times I'll be in these trades and I'll think, yeah, they're probably going to stop me on this trade. So should I just go flat on the position? I usually let them stop me out because I'm too stubborn. So I don't think I'm going to be able to fix that. But if I see, okay, we got one more price pulse to go here. I'm going to buy this. Markets are about to open. We're dojied out. I'll add a little bit to the position. So if I'm on a 20-hour trade, I hope I scalp the first 8 hours of all the drama, because I can't even imagine holding this giant position through the whole fucking move, because there's so many retests. There's used to be like, dude, we were just up $800 and now we're only up 200. And I knew it was a screaming 4-hour move. You can, like, when you see the market go up for 8 hours or 40 pips in 4 hours, you're like, that's fucking, or 40 pips in an hour, you're like, that is probably not going to last. Now, if you're in that trade, this tired saw about the, let your profits run. Yeah, really? How far? That one kills me, but this is like I said, if you have predetermined exits, that's going to make more sense, because you don't want to dump that whole position. Maybe you scalp the 20 pip drama, 30 pip drama, but you see there's probably, after all that shopping around, you're looking down the road as that like in this euro dollar here, when it's coming down like this, look at how many bounces. And is it going to complete now and really take off? When is it really going to retrace all that shit that the floor it fell through this floor over here? Is it ever going to make it back there? Now the swing traders, and that the idea is that it's coming down, it's coming back up. But look at these 4-hour situations. If you got buy limits in here and you're scalping to here and you got maybe a couple left on the table, and then you come back with sell limits here to make it to here, you may not be in this trade, but like you made money from the buy and sell side, pretty damn good trades, and the final destination for this guy, it may be here. And this was another attempt to take out this to make it to here. You're going to wait like 2 days here? You're going to wait 2.5 days for this to consolidate and go up to here. Look, I hit my target. See what? This is a Gartley pattern. Did I ever explain Gartley patterns to you? Yeah, that's the end of the Gartley pattern. See, it's like this. It's like 2 triangles, and then it completes over here. Yeah, really? No, I always wonder, were you in like a single position? Even if you're in a basket of trades, you still have the dilemma of, well, I just made 40 pips in 4 hours. Now it's taking me 4 days to make 40 pips, all the way back to where I was. Definitely the 20 pip, 30 pip scalp, and I mean a burst of 4 hours. You just made 50 pips in 8 hours. Wow. U.S. market opens, thing explodes, or Europe opens and explodes. There's going to be that explosion moment. Then when it gets to Asia, it's stalled out for 8 hours. It's doing nothing. And that's the time to analyze it for limit entry, or the time to say, well, it's time to, are we going to follow through? So at the end of the day, market's up all day, pauses in Asia. And there's probably going to be, maybe if it's up 50, it's going to continue and make another 30 pips. For you to make the same amount of money, you're going to have to really get in heavy on this 30 pip move, which goes against your idea that, okay, it's up, it's going to pull back. Should you put buy limits in shallow? So those are all the considerations. I'm probably going to put shallow. If it got really up hard, and then I figure Asia's going to pull back. So I'm going to treat it like a trend trade. I'm going to have shallow buy limits, let them come back, fill me, then it takes off. Or I put in sell limits. It goes up really hard, pauses, but sell limits thinking, oh, it's going to come back down. Now, it may not retrace all the way, and it typically won't engulf. Like a complete reversal is rare, where you have a hammer. At the very bottom, the lowest low is a hammer, goes down, comes back up, and then never looks back. Pretty rare, because most of the time, it's just chop. It's just garbage. So your probability of getting filled by buying 10 pips deep for 4 hours, pretty good probability you're going to get filled on that. And then you're going to buy 15 pips deep, 20, 25. How many pips apart, for how long, how much exposure, and so then you're not in the analysis mode now. You're like in trying to get all the tickets to have their own unique trade plans, diversified trade plans. Because the market does make giant. So if I go to the daily, So a daily looks very smooth, clean. Oh yeah, I can see it coming back to here one day, right? But look how hard look at the hard time it's having coming back to here. The first bounce, they almost nailed it, right? And that's why you'd have to get out of that trade, because when it came down that hard, that fast, this is like, my God, this is coming down at like a rate of 200 pips a week. It's just down. And then Sunday night, dead cat bounce. Trend traders are coming in, right? Anytime big move down, selling the shallow move up. Big move up, slight down, trend traders got to come in. We consider this a trend. This price pulse here is a downtrend. I'm not looking at the overall 20 EMA because it just, to me, is just way out. It's completely out of context. I can't take all these zigzags and make a trend out of them and just, So right now it's an uptrend because it just went ripping up. So Monday, I would put buy limits here and just like, okay, I'm not going to sell into it because if they take it up to here, so they take it to here, pulls back, but I don't think it's pulling back down here. Whereas I think it's more likely we could pull back shallow and then rip up and finally make. So the final target, the counter move, the shallow move, entering there on limits ideally, but at the market if you have to because it's guaranteed fill. So those are simple rules, but I don't think you give a robot that rule because if you tell the robot, okay, you'd have to give him specific rules. You tell him, listen, up 80 pips in the last 4 hours, buy on shallow limits, 20 pips deep on the next time frame. So it's going to launch. So instead of like what I was saying before is that market's up 80 pips, sell at the market with 80 pips stop. Okay, there's a robot doing that, but what about the robot that says up 80 pips, buy 10 to 20 pips deep on limits with a tight stop with a good ratio? On most of the tickets have a good ratio, looking to make 20, 30 pips based on the last price balls. Yeah, I suppose a robot could. So robots I'm thinking about are very explicit, simple, dumb shit stuff. If the market's up 80 pips, put it. In fact, that'd be a great trend system. If in the last 4 hours the market's down 60 pips, put in some sell limits from 10 to 30 pips and see what happens. Because if it really is going to do the dead cat bounce, you're going to fill your sell limits on the dead cat bounce and then you're going to follow through with the whole thing down. And ideally getting different fill levels so you see it happening, unfolding in front of you as it fills the tickets. Because it's one position trading. I mean, that is tough sledding. Even ICT is not dumb enough to do that. So he scales in and out of stuff. But it's funny how he makes everything such a mysterious storyline. That's the charm of ICT, is the mysteriousness. Now, can you just be honest with us? Are we all going to hell here? You turned everything down. You turned everything off. Oh, you got to have an electric truck. I'm sorry. That's why they can't get the cargo through because you got to have an electric truck in 2020, by the end of the year. That's okay. We'll just use drones can't we just have a bunch of drones pick up one of them containers? How hard could that be? Shit, I got it figured out already. See, here's the thing. Just take the container, put it in the back of Joe's truck. Fuck, he got a shotgun. You know what? How about we have, let's have the staff, these clowns, these parasitical fuck clowns running the country. All right, so, yeah, here I put, if I thought this was going to keep tanking, but there's a difference between this guy that says, well, it's in a downtrend, can't you see? I'm like, well, no, actually, for me, uptrend, pulls back, maybe goes to here, get out. And, of course, having the sell limits here, a lot of sell limits there, all the way to there. Okay, but the targets have to be scalps because I don't see it coming to here. So, yeah, you have to kind of, if it's down hard, you put your sell limits in, you got filled, right? It's down real hard, you put sell limits in, but maybe you put them in too tight and then they stopped you out and you didn't have targets way down here. So here's a tricky one. It goes up, you're like, okay, you know what? It's going up. Let's put some buy limits in. Uh-oh, they just took you out. So the robot would make that mistake. Robot says, oh, of course, the biggest wave changes when it goes into a doji. This is what would confuse any robot that has that rule set, because now, well, how much did it move? It's not a hard, fast, clean rule. This never is, Look at all this zigzag stuff here. You can't say that about these trades. Here's the only kind of cherry pick one. I saw down and then shallow sell limits and then kind of equal price balls. But here up, okay, put some buy limits in. You know what? Unless you scalp out of that, they kind of crushed you. Like if your stop is here for your buy limits here, well, they just fucked that up. Here too, up hard like this, you put your buy limits in, you're gone. That trade plan, that's gone. So this could come ripping all the way back and down. All right, if you're living for the next 16 hours, and did you put buy limits in here that last forever? Because there's a big difference between that and saying, okay, they're only going to last, and not buying at the market is dropping, just buying limits only. If they expire, then, okay, you filled some here then, right? Because they lasted long enough. The deeper they are, the longer they last. So maybe you're heavy buying. You're like, oh, once they get below this, Jesus, load the wagon. Yeah, and then you're going to make that and then some. Each price pulse has a different pip length, so pretty tough. So I think the easy trade next week is to come in with the shallow tickets. And honestly, I'm fine with just making money from not these big grandiose moves. Like I can't psychologically handle selling here and getting out here. I just can't. If I sell here and I see that there's a lot of buyers in here, I'll probably cash out. Or even buy into that and get out here. So I'm not going to think about riding this down. Then I would think about, let's buy a limit here, buy a limit here, buy a ton here, and dump that. And then I'm out. Then if we get below here, yeah, buy. Now here, it's the only time I can make money, but I got to be very careful buying here because this goes back so far. Like when you look at this low looking back, well, yeah, when it comes down there, man, the reaction is just almost above and beyond the Call of Duty. And then here, holy shit, here's the almost engulfment. When you take this low out, going way deep back now, it's an older low. Obviously, here it's an older low because it's farther out in time. And then look at this rip. Here, kind of dojis out as it approaches the classic resistance, but then, wow, what a rip. All the way to the end of the week. But then coming in on Monday there, Top Tick Tommy buys it. I'll talk about the losing trader. This dumb money entry. Because look at this. This is 1 week of structure where this here is like from wick to wick. So this from here to here is just 16 hours between these lows. But this is like a whole week between these tops. So it's pretty dramatic. And I wouldn't care really where we were in this whole picture of things if I'm just trying to make buy limits here, cash out, sell limits here, cash out, back to the center point is just the first target at least. And if you're out of 80% of the position or 50% of the position, you can afford to sit there and either add to it, put on a new trade. So if you're doing this 2% risk idea, I think it's better to go 10% and go, oh, I'm only in like 0.01% risk. We've got a risk spectrum of 10% to, like, just consider a $5,000 account, risking from $500 to $40 or $30, $20 to $500 max. So you're allowed, the account's allowed to go to $500. So at this point, you're down. Like, so if you bought from here, you're down $100. Now you're down 200. Now you're down 300. Now you're down 400. And in a just so happened that, wow, buying on these handles here, when it came back, I could just cash out now. Or I could even cashed out of some of that early on that first bounce. I like that trade because structurally, it's a structured trade. Like, so selling above here, even though, yeah, this is a losing trade, right? I start selling. Now I'm getting underwater. But if I'm selling off of these tops here, and just amazing all the way back. Retesting that. Of course, if you sold here and you didn't get out when it was down here, you're probably heartbroken. But then do you sell more here? Most people aren't going to, oh, yeah, you know what? That was such a good trade last time and I didn't get out. Let's get in here and let's just write it down. Let's just fucking go lower, right? There's a special kind of person that's going to do that trade. It wouldn't be, I mean, I don't even know who's doing that. Because with all the zigzags in here, you got to ask yourself, who's not jumping off this thing in the next 40 hours, the next 24 hours? It's like you just, 6 bars in your direction like that. Coming into the next day, at the end of the day, I'm like, I'm going flat, especially when the spreads get really wide, at 5 o'clock. Just get the hell out. Anyways, that's just my rant. That's my rant about the market.